Yes, sir. Yes, sir. You've been making a lot of progress, I see.
Hey, thank you, bro. Hold up. Thank you, bro.
Nice, bro. Let's go.
Yeah, man. Those anabolic steroids you told me about, bro, they have done wonders for me, man. Like, I just made a good investment into my growth, and I applied it well, too. I guess I'm just good at applying growth investments. So I'm like that little dude over there.
Man, what are you doing, bro? What are you doing?
I can't make any progress in the gym, bro. I invested in those catabolic steroid things and
No, man. Those are the wrong thing. You made the wrong investment for your growth, man. Those make you smaller.
Dog, bro. Man, I wish someone would teach me how to apply investing into my growth better.
Yeah, well,
Now, first of all, we'll talk about diversification of your growth portfolio. First, you want to try to diversify sectors as much as possible. There are some favorite sectors in growth investing, as we talked about before, such as technology and healthcare. However, it's also very beneficial to invest in growth stocks that are not in those sectors so that you can diversify your portfolio very well. Next, you can look into growth funds, which are basically large diversified collections of growth stocks. And these are not as likely to make you as much profit as investing in individual growth stocks. However, it is certainly a lot less risky. Next, you can diversify investment strategies. For example, you can include value stocks in your portfolio alongside your growth stocks. And lastly, you can find stocks with positive and negative betas. If you remembered our last video, we can use beta as a way to filter out and find growth stocks. So including stocks with positive and negative betas can be beneficial to reduce our losses in market downturns. Now, when it comes to monitoring your growth investments, growth investing is usually a long-term strategy. However, it's not as long-term as something like value investing, just because growth companies usually don't maintain their growth rate for 10 plus years. However, with growth stocks, you generally do want to hold them for at least 3 years. And also, whenever the financial statements are released, you want to check those and make sure you calculate some important ratios and growth rates to make sure the company is maintaining their growth. And if they're not maintaining their growth, you have to look into why that may be, because that could either be a reason to sell a stock, or it could just be an unusual occurrence that you don't expect to happen again.
Now, so when do you want to buy and sell growth stocks? Now, when you're buying a growth stock, there's no specific criteria. However, you want the company to generally be financially stable as shown in the balance sheet. You want rapid growth in revenue, earnings, and cash flow as shown in the cash flow and income statements. You want good reinvestment back into the business from the company's cash, and you want good ratios and growth rates for the company. Now, when you're selling a growth stock, you want to sell when the growth stock no longer qualifies as a growth stock, and you also want to sell when there's weakening financial performance, such as lowering growth rates, and you also want to sell if there's concerning things on the balance sheet and cash flow statement that may affect the sustainability, like lowering growth rates and the current business model not being what you want it to be.
Now in this video, first of all, we talked about how to diversify your growth portfolio, such as buying growth funds or diversifying the sectors you invest in. After that, we talked about how to monitor your growth investments, generally holding your growth stock for about 3 years, if not longer. And you also want to make sure you check the financial statements and make sure there's no concerning things within those financial statements.
And finally, we went over when to buy and sell growth stocks, buying and seeing if a company is financially stable, if they have good growth rates, things like that, and selling. And the main important thing in that was seeing if a stock still counts as a growth stock, and that's a main factor when you're trying to sell. Profit's a profit. We out of here.
Ow, man.